The latest inflation figures are out and they're not good, but the below target performance means interest rate cuts are now virtually assured. And that forecast has helped the stock market to an 11-year high. The Nine Network's finance editor, Ross Greenwood, has all the details.
Zero, nada, zilch. That's exactly what consumer prices or inflation did in the past 3 months. Annual inflation is 1.3%. That's way below the Reserve Bank's target of 2%. Falling in the past year, the cost of insurance, recreation, communications gear, transport, furniture, clothing and footwear. The biggest price rises were for health and education. And that low inflation rate is why interest rate cuts now are virtually assured. Labor leader Bill Shorten, well, he read the signs and called for higher wages.
This is an economy running on empty. It shows you that people have stopped spending money. And do you know why they've stopped spending money? Because wages aren't moving.
Not surprisingly, Prime Minister Scott Morrison, well, he read it differently.
We're up 1.3 over the course of the year. That's something I know the Reserve Bank will keep looking at. They'll also keep looking at what we're seeing in terms of employment growth.
But while consumer prices are flat, share prices soared. The forecast of lower rates boosted the ASX to an 11-year high. It followed the US market on Wall Street rising to an all-time record high overnight. Here, the banks led the way, but also strong energy companies, riding a 55% increase in oil prices in just the past 5 months. So petrol is the one price rise you might have to allow for in the months ahead.